Yeah. Now we talk about the cash book itself. The cash book. This is question 1. Yeah, this is question 1, and we are talking about the cash book. Remember that the 3-column cash book, I've already explained the main idea behind it. It's basically where the senior accountant keep record of those bigger expenses, isn't it? Those that don't go in the pet cash book.
Yes.
So this one basically has 3 major columns, right?
Uh-huh.
Are you able to see the columns themselves? They are here.
Yes.
You don't
So
need
this
to
is the
memorize.
standard format.
Yes, this is the format, sir. It will be given to you in an exam. This is a question paper.
All right.
It will be given. You don't need to memorize.
Okay.
Now, they have said, what have they said? They have said you have to complete the cash book using these same details. Now, this cash book that we do have, obviously you'll be able to see if I use the red marker, right? Are you okay with the red marker? Hello? Hello, are you still there? I can't hear you. Hello? Hello, sir.
Hello?
Yes, sir. I was calling out if you are able to hear me.
Sorry, my network. Yes,
All right,
now
it's
I'm back.
fine. You can hear me?
Yes.
I've just decided to rewrite the same format here again.
Okay.
I've decided to rewrite the same format here again so that we are not switching to go again to the previous column. Discount, cash, and the last column, bank. Have you seen how it is? So it starts with date, details, discount, discount word, allowed.
And
Cash
receive.
column, bank column, like that. Now listen carefully. In here, we record only the transactions that involve cash and those that involve the bank. Okay? We are interested in the transactions that involve cash and those that involve the what? The banks. So, when you read the transaction, your question first of all is to ask, is this transaction involving the bank or it is involving the cash? Simple.
Okay.
When you have established that the transaction is involving the bank or is involving cash, then your next question is the bank account receiving or it is giving? Or the cash, if it is involving cash, is the cash account receiving or giving? That's your next step. So there are 2 steps basically. Number 1, does the transaction involve cash or bank? Simple. You establish, or it involves the bank. Okay. If it involves the bank, is this bank in this case receiving or giving? Simple. So that if it is receiving, you debit the receiving account. if he's giving credit the giving account, you know those things, right?
Yes, yes.
No much worries. Let's start. Third match. There are cash sales, $580 that were paid directly into Rahati's business account. Now, let me pass a comment. We are saying these are what? Are cash sales. Why was this important? Why was it important to say cash sales? This is because there are two types of sales. This is what you should understand always. When you talk about sales, sales can be grouped into what? Two groups.
Okay.
There are what we call cash sales and what we call credit what?
Sales.
Yes, sir. You could sell on credit or you may sell on what? On cash. What does it mean to sell on cash? It means when you give the product, the good or the service, then the person gives you money there and then. That's a cash sale. But if that person is going to pay after a certain period of time, then we say that that person we have made a credit sale. So the emphasis that this is a cash sale has nothing to do with us saying that, oh, this is a cash, this transaction is involving cash account. No. Or maybe it is involving the bank account. No. This cash sales is just the name of the sale. Obviously, you have understood on that one. Let's move on.
Yes. So what about
the cash
credit?
sale? Sorry?
When it comes to the credit sales, do we put them in the cash book?
No, sir.
Oh, okay.
Here we are dealing with cash and the checks. Simple. If the transaction is for credit, then there is no cash involved there. There is no cash, there is no bank involved. So such a transaction goes not into the cash book. It doesn't go.
Okay.
So now, 580 were paid direct into the business bank account. So which two accounts are involved? Which account is involved? Is it the bank account or the cash account?
The bank.
Step number. Yes, it's a bank account. Then the next question we ask ourselves, is the bank account giving or receiving?
Receiving.
Yeah, it is receiving, right? So we paid directly into the what? Into the bank account. So for that reason, we are going to write the date, which will be 3 what? March. Are you following?
Yes.
The bank account is receiving 580. So we'll record on this receipt side. You know, understand, eh? Then what are we going to put under details?
Cash sales.
Yes, we're just going to put sales.
Sales, yes.
Any question?
No, it's clear.
Is this hard?
No.
Hello, you are an economist. These things should not be hard for you. Economists are intelligent people. Very intelligent. Okay, let's go on the 60th. What happened? You paid insurance 360 by direct debit. Right? So we are paying by direct debit. I told you the steps. Right?
Yeah.
Step number 1. Are we having a cash account or bank account involved in this transaction? That's our question.
So what does direct debit mean?
All right. Thank you very much for that question. I want you to be asking as many questions of such a kind, as possible.
Oh,
yeah. Direct debit, sir. Listen carefully now to me. It simply means that, for example, you make a subscription as a company, right? You make a subscription, you subscribe maybe to Zoom or to whatever subscription. Then when you're making that subscription, you know what is happening is that you have to enter your bank details, right? Yes. You have to enter your bank details. Then those people to whom you have subscribed to, they do not need to come to you when they need their money. They just go to the bank, they just directly deduct your money, you understand, right? They directly
Oh,
deduct your money. They don't have to question and ask you, should we deduct or what? As long as you subscribed, Kwasila. Subscribing, it means they are going to be deducting the money specifically, right? So
yes, yes.
that's a kind of a transaction when they deduct direct the money without asking you because you subscribed, for example. It is what is called a direct debit.
Okay.
You got it? It's direct
Yes.
debit, like the money is deducted directly from your account. Then, on the other hand, there is what we call a standing order.
Okay.
A standing order. Now, with a standing order, I want you to understand these look similar. They sound to be similar. A standing order, this is where now you leave an instruction at the bank. You tell the bank that, please, I have the following accounts to be settled. Maybe they
Okay.
are settled periodically. Maybe let's say every 5th of the month, I have to pay to NAPSA. I have to pay for this. I have to pay whatever. I have to pay workers. You understand, right? So I have to pay for NEMA. So you just leave an outstanding instruction that, please, you be the bank. Can you be deducting such amounts every month on such a day and settle the following accounts for me?
Oh,
You leave an instruction. That is called a standing order. So they're going
all
to be
right.
deducting. It is almost similar to the direct debit, eh? It's somehow related, but they are different. Obviously, you've known the difference. Let's move on now. So by direct debit, it means the money came direct into the bank, was paid via the bank. So this was the 6th. You go the date, you write 6. Then you are paying for what? Details, insurance. You are paying by bank because this is direct debit and you write 360. Are you able to see the 360 written? Hello?
Yes, yes, I can see the 360.
Okay. You can read the 9th. What is happening on the 9th?
169 to GH Limited by telephone transfer, having deducted 2% cash discount from the
Right. All right. Now listen carefully. How much did you pay? 196, right? Isn't it? Okay. So you paid 196 by telephone transfer. Okay. Which means you never paid by cash. This is a bank transaction. So now listen, the point saying you had already deducted 2% discount from the amount due. So which means that the 196, I want you to listen carefully. The 196 is not the amount due. You understand, right? This is not the actual amount they were receiving, they were owing. This is the actual amount, this is the amount that they paid. But the question is, how much was it before they deducted the 2% discount? You understand, right? Hello?
Yes.
So how do you get how much it was before they deducted? You just get this, how much they paid after the discount, which is 196, multiplied by 1 plus the discount rate in decimals. Okay? D is the discount. So you say 196 multiplied by 1 plus what? 2% is 0.02, right? So when you multiply 196 times 1.02. Remember, 1 plus what is 1 plus 0.02? It's 1 point what? It's 1.02, isn't it? So you can multiply these two. It will give you the original amount.
Is 199.92.
So you can say 200, right? Isn't it? Hello?
Yes.
What this means is that before they deducted the discount, the amount due was what? 200. But they paid how much?
96.
196. How much was the discount? 200 minus 196, which is 4. Are you understanding? So you don't write 2 here, 2% on the discount. No, we write the actual amount.
Okay.
I repeat. So when you are finding such a transaction where they had already deducted the discount, first of all, discover or find out how much it was before they had deducted the discount. And how to do it, I've shown you, is to just say the amount they paid after the discount multiplied by 1 plus the discount rate in decimals.
Okay.
And when you add that and multiply the way how you are multiplying, it will give you the actual amount before the discount. Then deduct the actual money they paid from the amount due. It will give you the discount in figures. Okay.
Yes.
Any question?
No, it's clear.
No, you have
It's
to
clear.
ask questions. We don't want you to start saying, no, we are wasting money. This guy is not even very clear. All right, 13. We paid 75 cash for stationery. On the 13, we are paying, right? For stationery, isn't it? And we are paying cash 75. You write in the cash column. On the 17th, we have cash sales. The date is 17th. We have cash what is sales of 140. So we have received cash 140. What shall be the details?
Sales.
The sales. Are you okay?
Yes, following.
Now, 27, I'm interested in. Sold old office equipment to Burgess, who paid 50 by check in full settlement. Now, I want you to remember the difference between selling and disposing.
Okay.
I also want you to remember the difference between buying and purchasing. I'll remind you. This is very crucial. You have to be writing notes, right? When you are attending my classes, they're full of information.
Yes, I'm writing.
Let's start from selling. Now, if a business sells something that they exist to sell, that is called a sale. For example, if this is a tech company, they are selling computers, right? Then they sell a computer because they're in a business of selling computers. That is called a what? A sale.
Oh. So it's only
Because
for things that the business
is
does.
doing, is selling. Exactly. It can be a service or something.
All right.
But if this same tech company that sells computers, they sell their old car, that is not a sale.
Oh.
It is called a disposal of an asset.
Okay.
So disposing assets simply means just selling something that you don't exist to sell, those assets. You start selling maybe old ones, those that you no longer like, you no longer want, chan, you know those things, right? That's called what? Disposing the assets. Let's come back now to weekly buying. This company that is selling computers, right? They go to their supplier to buy computers so that they can sell them. That is purchasing. When you buy something for resale, that is called what? Purchasing. But if this company, they are selling computers, right? They buy maybe a car for personal, for using, so that they can be using it as a company, not really to sell it. That is not purchasing. That's buying.
Okay.
So from accounting, as accountants, the way how we understand these words is wrong in the context of accounting. Remember, these are just jargons. It's wrong to say, I have purchased a phone. If you're buying that phone for use, like you're going to be using it, that's not purchasing. It's not right to say, oh, I've purchased a phone. You understand, right? Because purchasing means you're going to resell that thing. You get the point? Yes. Unless you buy that phone so that you can sell it again, that's purchasing now. That's not buying. But if you are getting that thing for use, that is not purchasing, that's buying. Obviously, I've understood the meanings of the four words. Now you're good. All right. So now on the 27th, what happened? We sold office equipment and we received a check. So what is happening? So our bank account is receiving 50, right?
Yes.
What are we writing as details?
Office equipment.
Right. Because we are selling, you understand? The old office equipments, this is a disposal.
Or disposal, yes.
Right. Then on the 3rd, we paid 340 to Colin by check in full settlement of 350. We are paying to who? To Colin, which is a personal account, right? In full settlement of a date for 350. So instead of paying 350, we paid 340. So you write 340. That's what you paid.
Okay.
Then the remainder, obviously, is a discount.
Okay.
Are you good?
Yes.
Then when you reach here, you balance off the account. How do you balance off the account? It's the same story. Let's start from the bank one.
Okay.
Let's start from the bank. Total up for the bank side and also total up the total up the credit side and the debit side. On the debit side of the bank column, how much do we have?
We have 630.
630. Let me just write it somewhere here. What about on the other side?
$896.
896. So this is the biggest amount. So write it on both sides. You remember what I told you, right?
Yes.
The biggest amount to be written on both
sides.
Then in this side where there is a small amount, you write with the last day of the next month and call this balance what? Carried down. What's the difference? 896 minus the sum of this. which is 630.
630. 266.
266. As a balance what?
Carried
Carried
down.
down. Then you write it now on the opposite side. This is March, so the date will be 1 what? April, which is the next month. Because this is the carried down simply means this is what you've closed. This is how much you have in your bank. 266 as the day end. Now next month we will have the balance what? Brought down. Isn't it?
Yes.
Of the same amount, 266. Understood?
Yes. Balance brought down. Okay. So I'm now doing for the cash?
Let's go for the cash. What is the biggest amount? Obviously, it's 140, right?
Yes.
140 is bigger, or write it on both sides. Then this side where it is smaller, we'll write again 30 and balance what now? Carried down. Then you say 140 minus 75, right? Since there is
Yes.
only 120.
65.
Which was how much?
65.
65. And the same
Yes.
one will bring it the other side with a new month day. 1 now, April, right?
Yes.
And you call it the balance what?
Brought down.
Brought down. And write here, 65. Then for the discounts, just the add and the total the map there is 14. Simple. You don't need to balance off there. Like credit, carried down, what? Just add, eh?
Okay.
This is what you are expected of doing. Is there any question, any challenge, any problem, any concern?
For just the last transaction there on the
Yes,
on the 30th there.
Mhm.
He said that paid 340 to Colin by check in full settlement of a debit of 350. What does full settlement mean?
Oh, like let's start from this understanding. Look, you paid
Okay.
340 to Colin, right? Using a check. In full settlement simply means you paid completely, you were not owing anything. You fully settled. By the way, paying credit simply means settling your account. You understand?
Yes.
When you hear me saying settle your account, we mean can you pay your debt that you're owing? So when you say in the question, this was in full settlement of a debt, it means that after paying this 340, they were no longer owing anything.
Oh, so that means that they also received a discount.
Exactly. So the total amount they were owing is 350, right? Out of 350, they paid 340. When they paid this 340, they were no longer owing anything. That's what full settlement is.
Oh, so
Which
that means
means
that
the
we
10,
received the discount.
they received the discount of 10. That's why I wrote that discount of 10. You got it?
Don't you not have to put it in the debit side?
No. When do you receive the discount?
I don't know.
When you pay. When you are supposed to pay, look at this practically. You are owing some people. You want to pay them, right? Then they say, oh, don't give us all that money. Actually, we have given you a discount, isn't it? So
Yes.
just pay us this much. So a
Oh.
discount received is on the credit side. When you are paying, that is when you receive the discount. You understand, right?
Oh, okay.
But when you are receiving, you allow the discount. You don't receive the discount. You allow. You understand? Because when you are
Yes.
the one who is supposed to receive, isn't it? Instead of receiving maybe 200, you say, don't give us all the 200. We have given you the discount. That's a discount allowed. So on the debit side, we have the discount allowed. On the credit side, we have the discount received. So we receive the discount when we are paying, and we allow the discount when we are receiving.
Okay.
Any question?
It's clear.
All right, it can't be clearer than this. If this is not clear, then it's not clear.